ratios, but even gone beyond to nudge the banks to build up capital buffers in good times and times of plenty. As you may recall, we did this during the COVID-19 pandemic times when there was plenty of liquidity in the system, when the interest rates were low, and when the full impact of the pandemic on the financial sector was still highly uncertain. Now, talking about the business model, I think the recent developments in United States in particular, there is again questions about whether the business model of individual banks that have faced challenges, that have faced difficulties, whether their business models were right. There are questions being asked all around, but I am not going into that. Because these business models sometimes can sort of create risks in certain parts of the balance sheet of a bank, which going forward can blow up into a bigger crisis. So therefore, we are focusing now on the business models adopted by the banks, and I will touch upon it a little later in more detail. The Reserve Bank has put in place various prudential regulatory frameworks. These include, as is well known, capital adequacy requirements, asset classification, provisioning requirements, even dividend distribution and liquidity management framework, etc. In addition, the Reserve Bank also periodically deploys macroprudential measures to address system-level buildup of risks. As a consequence of the measures taken by the Reserve Bank, and the banks themselves, I must mention here, the Indian banking system has remained resilient and has not been affected adversely by the recent sparks of financial instability seen in some advanced economies. This also comes out clearly in our recent stress test results. The gross NPA ratio, that is the gross non-performing asset ratio for the scheduled commercial banks in India, was 4.41% at the end of December 2022, down from 5.8% on March 31st, 2022, and 7.3% as on March 31st, 2021. The CRAR at 16.1% at the end of December 22 is also much above the minimum regulatory requirement. Macro stress tests for credit risk indicate that scheduled commercial banks would be able to comply with the minimum capital requirements even under severe stress situations. Nevertheless, recent events in the banking landscape of the United States and Europe suggest that risks for an individual bank could crop up from segments of its balance sheet which might have been considered relatively safer. Hence, we expect the management and board of directors of each bank to continually assess the financial risks and focus on building up adequate capital and liquidity buffers, even beyond the minimum regulatory requirements. And this is required for continued resilience and sustainable growth of individual banks and financial entities. Now, turning to operational resilience, let me say that operational resilience would mean that a bank should be able to deliver critical services even in face of disruptions. Cyber risks and possible cyber attacks are on top of the list so far as such disruptions are concerned. Cyber risk has been identified as the foremost in top 10 operational risks for 2023 based on a global survey of financial institutions. The Bank for International Settlements, that is BIS, while revising the principles for sound management of operational risks in 2021, introduced specific principle on information and communications technology, that is ITC risk management, reflecting the importance of this risk. Robust IT and information security governance would help in increased predictability and reduction of uncertainty in operations, minimize losses from information security related incidents, and enhance operational resilience. Given the extensive level of outsourcing being done by the banks and by other financial entities, there is even greater need for ensuring that effective policies and practices are put in place in this regard. Even the G20 finance ministers and central bank governors are focusing on risks arising from third-party dependencies. The Reserve Bank has taken a slew of measures in recent years with usage of advanced analytical and surveillance tools, along with techniques like phishing simulation and cyber reconnaissance exercises to push for enhanced IT and cybersecurity governance processes in banks as well as in other supervised entities. In the context of growing exposure of our regulated entities to various risks from dependencies on third parties which provide technology and IT-enabled services, the Reserve Bank has recently, that is on 10th April this year, just about 20 days ago, the Reserve Bank has on 10th April issued comprehensive guidelines on information technology outsourcing by banks, NBFCs, and other regulated entities. Now, the third component of resilience, I mentioned about financial resilience, organizational resilience. The third component of resilience for banks and others is to, I think I mentioned about financial resilience, operational resilience, and the third component is organizational resilience. So let me now focus on organizational resilience in brief. Banks and other financial institutions also need to be organizationally resilient so that they anticipate risks early and absorb them efficiently. Organizations must have the capacity and resilience to protect themselves from adverse incidents and shield their balance sheets. To achieve organizational resilience, regulated entities need to continuously evolve by standardizing policies, processes, organizational culture, and governance. They must also be flexible enough to encourage diverse ideas and innovations within the organization. You see, there is one thing, the institution by itself should have the inherent organizational resilience to withstand crisis. And I elaborate upon it a little more as I will, delve in greater detail on this as we go forward. Now, let me just also in this context touch upon the pillars of Reserve Bank's regulatory and supervisory strategy. An important element of our strategy of making the Indian financial system, including the banking system, future-ready is the robust and enhanced regulatory and supervisory framework which we have put in place. Our present approach to regulation and supervision has been built essentially on three pillars. First, one of our focus areas in recent years has been to strengthen governance and assurance functions within the regulated entities. The safety and soundness of the banking system relies critically on effective governance so that interest of all stakeholders, especially the depositors, are duly safeguarded. The essence of good governance is to build an environment of trust, transparency, and accountability. Depositors, whose money represents an overwhelming part of banks' resources, keep their life savings and hard-earned money with the banks. Protection of depositors' money is therefore a sacred duty which has to be fulfilled through good governance. There cannot be any compromise on this. The Reserve Bank is very particular that regulated entities have systems and processes that promote sound corporate governance. The assurance functions, that is, risk management, compliance, and internal audits in banks are critical links between governance and business. Assurance functions assist the board as well as the senior management in gauging whether the business operations of the bank or NBFCs are being run in conformity with the policies and strategies laid down by the board. The Reserve Bank has issued detailed guidelines for ensuring quality and independence of the governance and assurance functions. These areas are also subjected to intensive supervisory assessment.
All right, that was the RBI governor addressing at an event, talking that the financial resilience is actually linked to the bank's business model and strategies. Also said that the banks need to be organizationally resilient. Also, he said they are expecting the bank management to keep assessing the risk. An Indian banking system is resilient amidst the US banking crisis. That's the word coming in from RBI governor. We will cut into it shortly, time and again, but that is the crux of what the address was all about. But this is Buy Now, Sell Now, and I'm Cheryl D'Souza. Along with me, I have Shrishti Sharma joining me on the show. Remember, this is a show where we get you answers for all of your stock-related queries. But before we head to that, let's take a look at what the markets are doing. We are trading flat with positive bias, but what is very key to note that you have macro indicators that seem to be pointing towards positive direction for Indian economy. Take a look at what dollar index is doing. It is sub 102 levels. It is actually nudging to go below the 101 level as well, which augurs well for our Indian rupee. Remember, the Indian rupee is perched at the 7-week high against the US dollar. Apart from that, what is very key to note is the crude prices. The crude has now decisively slipped below the $80 per barrel mark. Remember, you saw the sharp spike in the crude oil prices right after the surprise OPEC plus production cut that had come about. So it has erased all of those gains that it had actually logged in post that decision. So yes, Shrishti, that's one of the most key important pointers to note, that the Brent crude now is off 10% from April highs. Earlier in the month of March itself, you have Brent crude hovering around 70 and then going back to $87 per barrel.
Well, yes, absolutely, Cheryl, and that is one of the key factors that we at India watch out for, because not just from the economy perspective, but other than that, there are a lot of crude derivatives linked stocks in the Indian markets, from the likes of the paint sector, tire stocks. All these sectors and stocks come in focus. So let's understand from our experts today onto the show that where do they see crude headed from here on what's their take on the crude sensitive sectors. Onto the show, we have Ashish Kapoor as well as Kunal Bhutra joining us live right now. Very good morning to both of you gentlemen. Kunal, firstly, let me come to you. Like Cheryl was mentioning, crude off 10% highs from April highs. So where do you see crude rallying from here on?
So, interestingly, we have to look at this in the context of the last 1 year of patterns for crude, because from 140 odd mark, per barrel mark for Brent crude, it's moved in a very decisive kind of a direction. Now, last month's exception, where the asset class moved from $71 to I think $86, $87, I think, and the resistance it took, at that 87 odd mark, gels in quite well with the overall trend for Brent crude, which is on the downside. Look at the way the asset class is panning out. It's behaving in an exact manner in terms of resistance and support. The resistance is around this 88 odd mark for Brent crude. The asset class is taking resistance almost 3 or 4 times in the last 3-4 months at those levels. And on the downside, 71 is a major support. So we are expecting crude oil to come back towards 71 mark. If it breaks 71 levels, then we can expect a major crack for Brent crude even going forward.
All right, so that's the verdict on the technical charts coming in for the Brent crude. But on that note, we'll actually slip into a break on this edition of Buy Now, Sell Now. But remember, viewers, it's time to be entertained, as the yearly Bollywood celebration has actually arrived. Get the chance to see your beloved celebrities and enjoy an unforgettable celebration of Hindi cinema. Be sure to catch the 68th Hyundai Filmfare Awards 2023 in association with Maharashtra Tourism and co-presented by Vimal Ilaichi exclusively on Colors and Geo Cinema tomorrow, that is April 28th at 9 p.m. Welcome back. You're watching Buy Now, Sell Now on ET Now, show where we get to answers for all of your stock-related queries. Viewers, we are live on Facebook as well as on Twitter, or you can connect to us on the WhatsApp number flashing on the top of your screen. Remember, you need to mention your name, the stock name you're looking to invest in, as well as the time horizon, buy price, and the quantity. That will help our experts help you better. And talking about our experts, today we have Kunal Bhutra as well as Ashish Kapoor joining us on the show. Very good morning to you, Kunal, as well as Ashish. Thank you so much for joining us on Buy Now, Sell Now today. And Ashish, let me put you in the spot, in fact, a tight spot, because if you could very briefly tell our retail investors what should they do in order to make sure that they keep their wealth protected. What's the right strategy? A quick one.
Well, I think world over there are fears of recession, and I think the situation is not very comfortable. What we are riding on is domestic liquidity and also domestic economy comfort. So I think best way to protect your wealth would be to put in stocks where of companies which are mostly driving their revenues and profits from the domestic market. Be inward focused, look at growth stocks in the Indian economy, related to Indian economy, and again look at stocks with very good fundamentals and investor friendly management and clear the growth trajectory going ahead. So clearly research and inward focus would be the two key things to going forward to protect and grow your wealth.
Okay, so that's the advice coming in for all our retail investors. But with this, viewers, let's kickstart taking all your stock-related queries. And the first question that I have, Kunal, is coming from Akhil, and he's holding shares of Imami. His buying price is 480 rupees, quantities 50 shares. He wants to know, can he hold this counter for the next one more year? He's in heavy loss right now. So what to do next?
Yeah, it's been trending down. Apparently, Imami has been an underperformer in the last 4 or 5 years as well, not just over the last 1 year, because in the last one year, of course, most of these the so-called FMCG names, they've actually gone into a correction. But Imami has underperformed even in the longer term time frame. So I'm not sure the rationale of picking up this stock as compared to the other peers, maybe like HUL or Nestle, Britannia, etc. I would suggest to make that switch or shift even at current levels. For example, I think HUL, maybe if the stock corrects say by another 50-70 rupees, could actually become a very attractive bet at current zone. Tata Consumers could be a very good bet. That stock has confirmed a breakout on the short term as well as on the medium term charts. So that could probably be a potential candidate for a breakout towards the life highs over the next 6 months to 1 year. So I think it makes sense to switch to either of these two names.
All right, here's a big shout out to one of our viewers, that's Ghosh Dada, who's writing to us from Delhi. He is currently admitted in Max Sakit. He's undergoing a knee operation, but yet chose to watch ET now while admitted there. Thank you so much for reposing faith on our show and on all of us, Ms. Ghosh Dada. But this query is for you, Ashish. He's holding about 12,000 shares of Cafe Coffee Day. He is in profit, but he wants to know what sort of strategy should he adopt with this particular counter. Makes sense to stay put with CCD or book out profits and park your money somewhere else altogether?
See, till now, CCD, still the clarity is not there of the future going ahead. But I would think that given the kind of presence they have and the kind of retail growth story going forward, I think the major damage which happened after the promoter got into a problem is already in the price. He's in profit. I think continue to ride on. Keep at best you can do is keep a stop loss at your buying price and continue to hold on, because from here onwards, I have a feeling that the things could eventually improve only. And if they improve, the stock can go much higher than the current price.
Okay, moving on to the next query, Ashish, coming to you for this one. The question is on Aavas Financiers. Surbit from Jaipur is holding shares of Aavas Financiers from a price of 1980 rupees, and we have seen the stock falling significantly in the recent days after the MD trims his stake. What to do next in this particular counter? How do you see the outlook of the company, and should he average at this point in time?
Well, I haven't tracked it very lately, so I don't want to comment on this now.
Anything on the charts that where this fall can take a halt?
Well, right now, as we speak, I think the stock has hit back towards an oversold nature of indicators, but you can expect a bounce from current levels of 1400, 1420 to maybe say 1500 to 1550 mark. But then that could be about it for Aavas Financiers, because the way the stock has been falling in the last 1.5 odd year from 3200, there's been consistent selling across the board for the stock price, consistently making a pattern of lower highs and lower lows. So I'm not sure that whether this could be a last selling for the stock price. That we'll maybe come to know maybe over the next 2 or 3 months. As of now, you can expect a mild bounce towards 1500, 1520 odd mark.
All right. The next one is coming from Subramanian Chennai. This from Chennai, I beg your pardon, and he's asking for City Union Bank. Kunal, he wants to know whether he can go for accumulation from here on for this particular counter. Not sure what his buy price has been for City Union Bank, but he has no doubt the stock is reacting today to the RBI's approval for the reappointment of the head of the bank.
Well, it looks very attractive on the charts. In fact, on the monthly time frame, assuming because there are still a couple of days left for this monthly series, monthly closing. But I think on the monthly charts, it's looking extremely strong. Now, assuming if it closes at the 139.40 odd mark for itself on cash levels, then I would expect a very big turnaround for City Union Bank. So what matters now is that whether you are okay holding on to the stock, say for at least another 6 months to 1 year. If that's the case, and assuming if the stock closes above 140 mark, for the April end of month, then I think it makes sense to buy as well as hold.
Okay, Ashish, coming to you for the next one. The question is from Sarma, and he's holding shares of Thyrocare Technologies. The stock is not very far from its all-time low levels, and he's holding the counters from a price of 513 rupees. What's the outlook on this particular counter? Any hopes on recovery?
Well, certainly, I think it's a very good story going ahead. I think, of course, time cannot be predicted when it will turn around, but I think it's a very great story going ahead. So, if time is not a constraint, I would say continue to hold on. In fact, if he has more money available, can buy more also at these levels. And I think over a period of time, this is a great story that they've been unfolded, and I think the returns from here could be fantastic.
Coming from Mukil, he's writing to us from Bangalore. Kunal, yesterday he bought Axis Bank 900 May call option at 20. He wants to know, should he continue to hold on to it or book out of it?
See, I would suggest to exit the stock, exit the option in case if it comes say closer to 20 to 22 mark, because 2 or 3 days back also the stock made a high of 22 levels in terms of options. Today's high is also closer to the 22 mark, which means it's getting into some sort of a supply zone for itself. So I think that should be a near-term trade which I would expect for Axis Bank call option which you are holding.
Okay, Kunal, the next question is for you. Deepak wants to know the immediate resistance level for SBI, and also any stock pick from the energy or the power space that you like at this point in time.
So immediate resistance for SBI would be around the 580 mark. That's a target which I had highlighted a couple of days back when I initiated a buy on SBI. From the other space of question, I think from the power space, I would still believe that Tata Power and Torrent Power are the two names which are looking extremely strong on the charts. Torrent Power apparently has been a better performer in the last 2-3 months as compared to Tata Power. But then again, both of them are quality names, and if you can probably allocate say equal holdings, equal percentage to both of the holdings on the power stocks, it will be a good strategy.
Okay, Ashish, coming to you for the next one. The question is from Poonam, and she's holding 500 shares of AGS Transact Technologies from a price of 83 rupees. Do you track this one, and would you be able to advise him whether to average at this point in time? The stock is AGS Transact. Here you go on the screen.
No, I don't track this stock, so I can't go to the company.
Yeah. Okay, Kunal, anything on the charts that you can help her with?
Well, I would suggest to exit the stock. It's been an illiquid name. I think very limited history, at least as if what I can see on the NSE. But no, I would suggest to exit the stock.
All right, this next one that I have is coming in from the viewer has not given his name. He's asking a combo view on Genus Papers for the medium term of 1 to 2 years. He's holding some other rate of around 17 rupees per share. Kunal, I'll take this one to you. Do you track this one? Very low volumes on this one.
Yeah, low volumes, again thinly traded counter, again lack of trends. The last 2 or 3 months also the stock has been going through a correction from 21 to I think 13 or 12 is where the correction settled up. But I think you should look to exit the stock. It's better that you shift towards a better name in the same paper segment. That could be either JK Paper or West Coast Paper. I think those are better bets rather than the stock.
Okay, Kunal, once again coming to you. The question is from Dhananjay, and he wants a technical view on 2 stocks. Firstly is Cipla and the other one is Voltas. Looking for a fresh swing trade on the buy side in both of these counters, and holding period is next 2 to 3 months.
See, for Voltas, I'm not sure what's the rationale of picking a swing trade, because the stock is actually in the last 2 days corrected from 870 to I think today 840 levels or slightly below that zone. So I'm not sure what kind of a swing breakout you're playing out for. I would suggest that it's better that you wait for that confirmation of a breakout above 870 for Voltas. Cipla, on the other hand, I think is just about on the verge of breaking past about the previous highs of 910, 915. So I think that could be a better bet. Cipla above 915 mark is where you can look to buy. And for Voltas, you'll have to wait out for at least 870 to be taken out.
All right, just marking the flashes on the bottom of the screen, you have government official who's speaking to various agencies saying that the GST Council will be deciding on online gaming tax. And the other thing that is key to note is that they're saying that they're mulling different GST rates for game of skill and game of chance. So that is something key to note out for. Remember that this has been going on for a while, the taxation on online gaming. GST Council will be deciding on that, and the fact that they will be mulling different GST rates for game of skill as well as game of chance. But let's move on. Let's continue with the rest of the queries then. And this one is coming in from TP Vinod. Yes, from Salem. He's writing this one to you, Kunal. He wants to buy Tech Mahindra July futures. He wants to know, should he buy today or wait for dips after the results? And what is a good level to enter and roll over for the next 6 to 12 months? He's also told me to tell you that he's a huge fan of you.
Thank you so much for that. For Tech Mahindra, getting to the query specifically, I think if I'm not wrong, the results are due for the stock price. Now, we've seen this very erratic behavior from these IT names, the likes of Infosys, TCS, and then the mid-cap IT stocks, where it's been almost all over the place. There is no consistent trend emerging for these IT names. So I think in that regards, it's always better to wait out for the results to get completed and it to be out of the way before you're taking a trade on the swing side, because then results could probably catapult the stock maybe 5-10% higher or maybe 5-10% lower, looking at the swing for these IT stocks. So just maybe hold to your your initiation of trade. I would suggest to wait out and buy the stock only post results, whether it's at 1050 levels or 950. That could be a better bet.
Okay, Mr. Ashish, coming to you, the question is from Ramamurthy, and he's holding two. First counter is Dixon Technologies. He's holding 50 shares from a price of 4,300 rupees, sitting at a loss what to do in this particular counter. And the second question he has is, would you advise him to buy Praj Industries at current level, and he's looking to buy a good chunk for this particular counter?
Well, I think Dixon corrected a lot, in fact, basically because of very high valuation. I think the company otherwise is doing quite well and has very promising prospects going forward. The reason why the investor and many others like him are in a loss is because the stock really shot up in the previous bull run and reached very astronomical valuations. After that, the stock has corrected significantly and has both time-wise as well as price-wise. So I think from here onwards, Dixon would be a good idea. And I think not only can the investor hold on, he should also look at maybe if he has money available for the long run, can also buy more at the current levels. Regarding Praj Industries, I think it's a very good story going ahead. Ethanol is something which will go on. The demand will keep going on for many, many years going forward. I think biofuel is certainly a very great story going ahead, and Praj has a very great presence when it comes to machinery for ethanol. So certainly, according to me, and again, the stock has corrected and has been lying low for quite some time. So according to me, it's a very good time to enter now. And if time is not a constraint, you can make good money from here going forward.
All right, so that's the view coming in on Praj Industries. But on that note, we slip into a break on this edition of Buy Now, Sell Now. Our viewers, stay tuned. When we come back, we continue taking all of your stock-related queries. So don't go anywhere.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and let's continue taking all your stock-related queries. And before that, let's address the flashes on your screen, because HUL will be coming out with the numbers. But before that, the parent company of HUL has come out with their numbers, where the underlying sales have grown by 10.5% versus the estimate of 7.6%. And they do say that the South African market once again has grown in double digits. So that's the update coming in from HUL. Also, if we talk talk about the stock price of HUL trading at day's lowest point, but nevertheless the stock will be in focus as we will keep a track on the earnings that are expected from this particular company. But let's move on, and once again back to the stock related queries, and Kunal, coming to you for the next one. This question is on Tata Chemicals. Question is from Sri, and he's holding 70 shares from a price of 1,073 rupees. Just a few days back, we did see the stock price moving above that 1,000 mark, but have drifted lower. So he wants to know at what price he should average, and what the view for the next 3 to 6 months.
See, I think what we saw last week was just about a reaction for the stock price in terms of the news flow. Which happened, and these are phases of the markets where a stock price they tend to keep on adjusting. But what matters is the longer term trend. Now for Tata Chemicals, the long term trend is extremely strong. It's good that you are looking out for a buying strategy rather than exiting strategy over here. I would suggest that if you're looking to accumulate, I think 900, 920 is a good base for the stock price. Ideally, after last week's fall, there should be a leftover correction which may take the stock back towards 900, 920 odd range. So I think closer you are towards the 900 mark, the better it is for you to accumulate.
Okay, the next one is coming in from Ravi Tega. One more coming your way, Kunal. But actually, before that, let me take one to actually Ashish instead. And Ashish, this one is coming from Ramesh. He's writing to us from Coimbatore, and he wants to know what's the future outlook for HDFC Life. He has about 1,000 shares stuck at around 520 rupees per share. He wants to know whether he should continue to hold, and if you suggest exit, then would Sun TV make the mark?
No, I think continue to hold on. I mean, of course, it is testing patience after the run-up, initial run-up after listing. It has lied low for quite a few years now, and in fact, last 2 years, it's in quite a bad performance, really underperformed the market. But that is kind of proof across insurance. I think all of them, LIC, ICICI Pru, HDFC Life, all of them have really underperformed and given a very bad performance. Reason is, of course, one is, of course, that especially in the case of HDFC Life, the run-up was very, beyond imagination after the listing. The valuation had reached very high, so it somewhere needed a correction. And secondly, I think the recent amendment to the taxation regarding the high premium insurance has put a big dampener to all these companies, because the great amount of margin used to be made in selling high premium insurances. Now, moment above 5 lakh has been made taxable. So a lot of incremental, growth could get, affected. Having said all that, I think because it's number of years of underperformance now, and given the fact that HDFC Life has a very prominent position when it comes to the private sector life insurance, it's a clear leader in this life insurance segment, and also otherwise very well managed, very well run, very cost effective operations. So at some point, whenever the insurance sector comes back into limelight, the stock should do well. So if you have been patient for so long, I would suggest continue to hold on. I think at some point of time, the interest will come back, and this otherwise is a very well managed company. So somewhere down the line, it will generate returns again.
Ashish, continuing with the insurance space, the next question is on Policybazaar from Ashok, and he is holding shares from a price of 700 rupees. Should he add more or quit at these levels, or rather exit at these levels? Ashish?
It's for me?
Yes, Ashish, this question is for you.
Well, I think, regarding this stock, see, it's like many other stocks in the same space. I think it depends. I mean, this is not for a conservative investor. This is for an investor who can take some risk and looking for a higher return. And if you are an investor in that kind of a category, then I think this stock is good enough. The business is definitely there. It is better than many of his other peers. So I think I would say continue to hold on. But be prepared for more volatility going ahead. And it's not something which is very conservative or something which is certain to go up. I mean, it can really change if there are more players which come into this space, or if the interest on these kind of stocks continues to wane even more. So the returns could get affected. It's really not for a very conservative investor who's looking for very safe bets. It's for investor who is aggressive and wants to take chances. And if you are in that kind of a investor, then I would say hold on, because like I said, it's better than many of its other peers in this category, which is a high risk, high return category.
All right, this next one is coming in from Sandeep Kunal, and he's saying that he's a very small investor and he started investing in Reliance, ITC, Cummins India, L&T for a very long term, that's more than 5 years period. These stocks are good to hold for that term, and also he wants to know any additions that he should make. Given that fact, these are all good, well-run companies, do you think there any other name that he can add?
Which are the names which you mentioned?
Reliance, ITC, Cummins India and L&T.
Okay, so I think it's always better that when you, so I'm sensing that you're trying to create a portfolio from a long-term play, and it makes very good sense to try and have more diversification. So look at it this way, that if the index moves up higher, then the major components of the index, major weightage would also move up higher. So banks, IT, they could also be a financial services index. Stocks from these spaces, something is where you can look to maybe add on from a large cap front. I would expect so for example something from the banking like ICICI Bank at current levels, which looks extremely attractive to me on the charts, at least from a long-term play from current levels. You can add maybe a mid-cap end of the private sector banking names, something like IDFC First Bank or RBI Bank, etc. You can look out for large-cap IT stocks, something like TCS, Infosys. Yes, these stocks are going through their tough time, but then I would believe that from a long-term play, there could be a strong chance of recovery. Then the risk reward is also very attractive. So, few additions which you can make at current levels.
Okay, so that's the advice on the IT counters. But with this, viewers, it's once again time to slip into a short break. But don't go anywhere. As we come right back, we'll continue taking all your stock-related queries.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and bottom of your screen is Mankind IPO subscription data. It has been fully subscribed on the last day of IPO, so that's the data that's flashing on the bottom of your screen. But taking the next query from Hemant Kunal, this one is for you. Firstly, he's saying that he wants to thank you because of his suggestion on Bector's Food, and he is actually making good profits on that one. But he wants to know any other recommendations that you have for the period of 6 to 8 months. Human nature, right? Aren't we greedy all the time? So he's asking whether he can consider Poonawalla FinCorp, AB Capital or anything else.
Yeah, you can consider all three of them, Poonawalla FinCorp, AB Capital, stay on with Bector Foods if possible. I think one of the other stock which has looked or rather sprung back into the charts in terms of a breakout is also DLF. The stock looks extremely attractive. So multiple options. Hopefully if the market continues to remain vibrant, we can expect many of these stocks and almost all of these names to do extremely well going forward as well.
Okay, the next question, Ashish, once again for you. He's a big admirer of your technical analysis, and the question is from Tushar, and he wants a suggestion on Whirlpool. He is holding 100 shares from a price of 1700 rupees. Should he hold or sell at these levels?
Well, I think in the immediate short term, there is a lot of pressure on this segment, which is consumer durables. But I think on a longer term, I think Whirlpool would be a very good idea. Stock has corrected a lot from its peak and has again, like many other stocks in this space, has lied low for quite some time. And then the company is doing very well. Otherwise, has a lot of clear leadership position in the washing machine and has a good presence in the other segments also, like refrigerators. So I think over a period of time, you will get very good returns from this stock. Well managed MNC stocks, so no problem. And I think a good entry point because the stock, like I said, has corrected and right now the sentiment is quite low. Nothing will happen in the very near term. So I don't think if you're looking for just a few months kind of a thing, then stay away. But if you have a longer term, more than maybe 2 years kind of a time horizon, then certainly this is a good stock and a good point to enter at this point.
With that, let's move on with the rapid fire then. And firstly, Kunal, coming to you, Ramesh from Kolkata is asking your opinion on Gujarat Fluoro and Alchem for the short term.
Both are very attractive. Alchem seems to have that slight edge in terms of a breakout.
Okay, Kunal, Vivek is holding shares of ABFRL from a price of 300 rupees, sitting at a loss. What to do next?
Don't average at current levels. Wait out for a break of the 200 mark, possibly in the next 1 or 2 weeks, and that could be a time where you need to average.
All right, this one is from Padma from Mumbai. I'm not sure for Mumbai, but Bank of Maharashtra at the price of 26 rupees per share. Maharashtra Seamless 400 rupees per share. Stay put with both of these or exit either of them, Ashish?
Well, I think stay with both of them.
Okay, Ashish, the next question is from a viewer, didn't share his name. He is holding GE Shipping, 1000 shares from a price of 456 rupees. What should he do next?
I haven't tracked it lately, so I'll let it pass.
Okay, Kunal, Neha from Mumbai wants to know about Bank of India planning to buy 3,000 shares. How the stock looks on the charts. Should she go ahead with it?
I think so, yes.
Kunal, Gaurav is holding shares of sales, 7,000 shares from a price of 100 rupees. What's the view on this particular counter?
Shift 50% of this to something like Jindal Steel or GSWC.
Okay, this one is coming in from Bisaka of Kolkata. Long-term investor with a vision of 3 years. Good time to buy Mahindra Holidays or ONGC. Ashish?
Mahindra Holidays, yes, a good time to buy. Which is the other stock?
ONGC.
Yeah, again, I think a very underperforming stock, but longer term vision, I think is still very positive. Longer term outlook is still quite positive, so you can buy both of them. Yes.
Okay, Ashish, Anjali is holding 60 shares of Angel One from a price of 1,411 rupees. Should she average at this point in time?
I think so, yes, you can go.
Kunal, Swati wants to know out of Zomato, Neogen and Finolex, which one is a good one to enter right now for a period of 1 year?
Zomato could be a better bet.
Okay, Kunal, Ram is holding Deepak Fertilizers, 100 shares from a price of close to 800 rupees. What to do in this particular counter?
Well, would suggest to continue to hold on as of now, not to add.
All right, and with that, we come to the end of the rapid fire as well as the query segment. With that, thank you so much, Kunal, as well as Ashish, for joining us on the show. And viewers, if you've not taken your queries, do understand we've been trying to take as many as possible, but we'll be back tomorrow. But with that, it's a wrap on this edition of Buy Now, Sell Now. Goodbye from Shrishti and myself and the team that put the show together. Stay tuned. Markets at noon coming up next.